Today's video, basically what we're going to be discussing is risk management for funded accounts or challenge accounts, and how I manage my risk or at least how I manage my risk on these funded accounts. So it doesn't matter what size funded account you're trading. If you're trading 100k, 200k, 50k, it doesn't matter. You always want to look at the percentage of the account and how much you're risking on a daily basis. So when it comes down to any account, doesn't matter if you start off on a challenge, doesn't matter if you start off on a verification, or doesn't matter if you're already funded and you're looking to just simply improve your risk management system. Your goal is to preserve that 10% buffer that you have to actually lose as much as possible. So your risk when you first start the account needs to be very low. For me, what I risk when I first started a funded account or a challenge account is I risked 0.5%. So I essentially risked half of 8% all the way until I got to that about 5% gain mark. Once I actually got to that 5% gain mark, then I increased my risk to a 1% gain, where I then looked for, again, a 2-to-1 risk to reward ratio on every single trade. And if all of those trades were successful, then I passed the challenge fairly quickly. But like I said again, guys, your goal is to preserve that 10% as much as you possibly can before you start looking to increase your risk. So I wouldn't start risking 1 or 2% right off of the bat. What I would do instead is start by risking half of 8% per position on my challenge account. And then once I get to a 5% gain, and again, I'm looking for a 2-to-1 risk to reward ratio per trade. Once I get to that 5% gain, then I start increasing my risk to about a 1% risk. And if I go back to break even, let's just say I lose 5 trades in a row and I lose literally 1% per trade and I'm back at break even, then my risk resets back down to a 0.5% risk per position. Once I hit that 5% gain and I'm up 1%, obviously I'm looking for a 2-to-1 risk to reward ratio. It's only going to take me roughly 2.5 trades to then reach that 10% profit target and pass the challenge. Some funded companies only do an 8% profit target, which in that situation, like a leveled up society, we only do an 8% profit target. Then it's only going to take me literally 2 trades to actually pass the challenge. When it comes to the verification, it's literally the same exact thing for the fund, or as a challenge account. The risk management, I risk 0.5% until basically I get to around like that 2.5% mark, and then I risk 1%, look to gain 2.5% on that specific position, so then I can pass the verification fairly easily. Now when it comes to the funded, this is where things get a little bit different. So with the funded account, I start off by risking 0.5% all the way until I get to a 5% gain. Now in between that 5% gain and break even, once I'm already up, I risk 1%. Again, if I go all the way back down to break even, let's say I had a 100k account, I was up 105k, now I'm at 100k again, I'm going back down to that half of a percent risk. And the reward ratio I shoot for every single trade is always going to be the 2-to-1 risk to reward ratio, meaning if I'm risking $1,000 on the challenge, I'm looking to gain $2,000 on the challenge. But when you start off the funded account, I risk $500 to gain $1,000 on the challenge account for an 100k. Again, the percentage is very simple. 0.5% looking to gain 0.5%, looking to gain 1%. Just to really quickly recap everything, right? Once I get to the funded stage, what I do now in this situation is I risk 0.5% all the way until I get to about a 5% gain. Once I'm at a 5% gain, I risk 1% all the way until I get about a 10% gain. Now I have a 10% gain buffer where I could look to increase my risk. And every 5% that I drop, I increase or I decrease my risk. So as my profit increases, my risk will slowly start to increase as well. But as my profit starts to decrease, my risk decreases as well. So again, now let's say I get to a situation where I'm up 10%. I'm now going to be risking 2% per position to look to gain 4%. But if I risk 2% and I drop back down to 5%, a 5% gain on the account, and then decrease my risk to a 1%. Let's say I go back to break even for after being up 10%, I decrease my risk to a 0.5% gain again, or to a 0.5% risk per trade again. Now let's say I go all the way up to a 10% gain and I start risking 2% per position. Now I'm up 20%. My risk is going to stay at that 2% per position, and I don't look to take more than 2 trades on a single day. So again, it's a very simple yet effective risk management strategy for you guys that you guys could look to incorporate into 2023. It's worked out very well for me in the past.